It's probably a pretty good time to start a fintech companies, but you have to like really have the grit and belief in that idea at a time where like maybe it'll be hard to get the same kind of level of funding.
I think actually the funding worked against so many companies. Like in the case of Toast, it was great, but so many companies, tried to like hyperscale, raise too much money, and that ended up killing the company. And so I actually think a lot of these ideas that were done in 2021 were good ideas, but just because of the funding environment ended up being poor. And I think some of these consumer opportunities exist now in a way that are better than what they were in 2021 for that reason in part.
Hi everyone, welcome to the Founders in Arms podcast with me, Imad Akun, co-founder and CEO of Mercury.
And I'm Raj Suri, co-founder of several startups.
Well, we have a special guest, Sheel Mohnot. Well, he's the founder of BTV Ventures and 500 Fintech. Sheel and I actually, for about a year during COVID, ran a fintech podcast slash clubhouse thing together, which was fun. So now he's a guest, but we've been co-hosts many a time. How are you doing, Sheel?
Great. How about you?
Pretty good. I thought it'd be fun to kind of kick off with fintech. Obviously, Mercury's in fintech and we're doing
Yep.
well. And I feel like a few other scaled up fintechs are doing well. But as fintech as a early stage industry, I'm trying to think like when's the last time I even invested in a fintech company? It's been quite a while and I get to see a lot of them from my vantage point. Obviously, you're an active fintech investor. So like, how are you thinking about the fintech industry? Do you feel like it's still a good place for entrepreneurs to kind of start companies?
Yeah, I think so. I think the way I think about it is just from a macro perspective. I started investing in fintech end of 2015. Basically, I've been investing in fintech exclusively since then. And my lens on it then was the same as it is now, which is financial services are like 20% of global GDP. And you can easily digitally transform financial services. It's just numbers. And then I think about it from a micro perspective. In my life, every day, there are things that I wish were better in my finances. And thanks to Mercury, many things are improving. That's how I think about it. And then, in 2021, things got really crazy where everyone was building a fintech company. And I think that actually was bad for the companies themselves because every company that we invested in, there were like four or five other companies doing the exact same thing. And so it made it more difficult for any one of them to be very successful. I think now we're seeing companies again that are starting and being extremely successful in fintech.
I feel like the tricky thing is the 2021 just explored like the idea space of fintech so extremely, right? It was like, I
Yeah.
think it was like 30% of all funding went to fintech, that it's hard to come up with like an idea that, like a new idea that didn't have like 10 million plus in funding in 2021 and didn't work out. Do you feel like AI creates like new ideas? I haven't seen that many kind of AI ideas.
Yeah, I think AI creates new ideas. And I think a lot of what was explored in 2021 was on the consumer side. And we're not seeing a whole lot of interesting stuff there today, even though I'd like to. But I still feel like there are a lot of B2B opportunities out there. And like you said, we are seeing some cool AI stuff. We actually have a company that I just met with that is in the AI for accounting space. And
There's a ton of those.
there's a ton of those. This one, actually, we have three different companies in that space. Um,
Yeah, I'm
but
invested in
this
two or
one,
three as well.
okay, this one sells into large accounting firms, and the results they're seeing are phenomenal. Where like it's only been, they haven't been live that long, but one of their customers already with just one module said they've increased profitability on the entire business. And this is a top 100 accounting firm, have increased profitability 5% already.
Yeah, I think accounting, bookkeeping, wealth advisors, like things where it's a lot of humans involved, and you could imagine AI is kind of uh, either augmenting or automating all of it, are pretty interesting. What do you think of fintech, Raj? Is that something that you've explored in your kind of entrepreneurial time?
Yeah, actually, Presto did payments. So we did a lot of integrations with all the big payment companies. I mean, we were processing billions of dollars of payments a year, but not we didn't really monetize payments. Another company in this space, Toast, is a big fintech, right? Like they actually really monetize payments, and it's a very unique business model where they basically give away their product at cost or for very cheap, and then they monetize the payments. And that model has worked really well. And I'm surprised how well it's worked because like basically like they make so much profit on their payments, it pays for everything else. But like I'm surprised that small merchants haven't caught on, to some degree, and like negotiated down the payments again or figured out some other solution. It just kind of shows, how much margin there is with small businesses on these payment resellers. So yeah, definitely very interested.
It's complicated because payments are so opaque. Like the small merchants especially don't know how much they're paying. But I do think this Toast is a great example of fintech, which is all these vertical SaaS businesses, start out offering some software product. And ultimately, like you said, they will all, I think majority of them will make more money from financial services than they will from software. And it starts with payments. They can add in lending, insurance, accounting, payroll. All these things are products that Toast has. And I think all these other vertical SaaS companies will ultimately have as well.
The good thing about payments, and actually like starting a fintech company when I'd never done one before, maybe this is really obvious, but when you're in the money flow, like either you hold money or your money is like transacting, yeah, even if you take a little bit off everything, it doesn't seem too unfair to customers because you can give away a free product.
Yeah.
But it's actually a lot of money and it's got really great price discrimination, right? Like you can make very little on a tiny merchant where there's very little money flowing, but on a bigger merchant, you can make a lot more. And it seems like somewhat fair to both sides. So it's an interesting aspect of fintech for sure.
I think so many companies are really an iteration of that. Like if you look at what's the difference between Airbnb and VRBO? VRBO, you had to pay on a listing basis. Airbnb, they just took a chunk of what you made and didn't have to charge you anything up front.
Yeah, that's super interesting. I feel like the way you just described it is like, okay, all of these vertical SaaS players are going to have embedded like accounting, payments, etc. That kind of tends towards like, this idea that was actually pretty hot in 2021 of like embedded fintech. And, I invested in at least one lending embedded fintech and one insurance tech embedded fintech. Do you think that kind of thesis played out, that there was winners in that space and they'll continue to be kind of big companies in embedded fintech?
Yeah, I think it's taken longer to play out than we had hoped. We have investments in a few different categories there. We have one in banking, which is Unit. We have one in payroll, which is called Salsa, and one in accounting, which is called Layer. And then there are a few other companies you could also consider embedded. Like between them, they have like Toast, Glass Genius, like huge number of vertical SaaS companies. I think the uptake has been slower than we expected, but with some of these companies now, new customer attach rate on some of these products is like greater than 50%. So it actually is working. And I think to your point on Toast, like Toast has a huge attach rate on all these other products. And I think the same will be true for these other fintechs too.
I remember, Raj, you were a big believer in Toast and you bought some at the bottom. Has that trade done well for you?
Yeah, really well. So up 50%.
I feel like I should have followed you. I never did.
Yeah. There's been a few trades. I can talk about some of the stuff, but I bought a lot of stuff in 2022 and 23, and it's gone pretty well. But yeah, Toast, I believe strongly in that company as well. I mean, it's MIT founders. I'm actually wearing my MIT shirt today, and I know the founders there. They're really strong. They're still only like 8 or 9% penetrated in their market. So there's a huge amount of these restaurants out there, and using like junk POS systems, and Toast is really dominating that market. They're the largest player, but they're still only 9%. So there's a lot of expansion room. Plus, the team is able to build new products in that space. So because it's a strong product team. So that's my pitch for Toast in the SMB space.
I've been a big believer in Toast for a long time. I have friends that own restaurants, and there was NCR and Micros are the old school guys on-prem for the most part. And you had to literally, if you wanted to change your tables, like if you wanted to move one table from one place to another or increase the size of a table, you had to call in somebody and pay like $500 for a service call for them to come in and manipulate something. Now it's like you pinch and squeeze on a screen. It's just so much a better user product.
I mean, I worked in that space for a long time. There was a huge graveyard of dead companies in that space, and so many companies tried so many different things, and I was shocked at like how many companies every year try to do the exact same thing, and then Toast actually is the only one who nailed it because everyone realized there was a problem, but the existing companies were terrible, but what it took was actually I think they took a combination of like a great product team combined with enough capital to survive all the years of like just torture that you have to go through to get to a recent. And I'm not normally a big proponent of raising capital for early stage companies, but for that particular model,
How much did they raise before they got somewhere?
they raised a lot of money. They had like I think Series A was Bessemer, raised at least 10-20 million, and remember they're Boston based company, so as a Boston-based company, not easy to raise. I've been through that. So, I think it was Bessemer out in the East Coast that invested, and then Google, I think, invested in their B or something like that out here in the Bay Area. And but they raised enough capital to go through all those moments of doubt, which happen in this space, especially very crowded space. But it also kind of shows that even though there's a lot of companies that die in the space, it doesn't mean the space is bad. Ended up becoming a big behemoth who just got all the combination right. Good product, enough capital, good go to market. They hired some industry veterans who I know were later, advisors to our company as well. And like the industry veterans came from the failed companies and they joined them and managed to make it work, with that combination working.
Yeah, I mean, to tie this back to the fintech conversation, it's probably a pretty good time to start a fintech company, especially even in an idea that like didn't work out in 2021. Like you're not going to get much competition. You can hire talent from like existing companies that didn't work out, and but you have to like really have the grit and belief in that idea at a time where like maybe it'll be hard to get the same kind of level of funding.
I think actually the funding worked against so many companies. Like in the case of Toast, it was great. But so many companies, tried to like hyperscale, raise too much money, and that ended up killing the company. And so, and, they never got the discipline in how to acquire customers and have like a lifetime value greater than your CAC or a quick payback period. And so I actually think a lot of these ideas that were done in 2021 were good ideas, but just because of the funding environment ended up being poor. And I think some of these consumer opportunities exist now in a way that are better than what they were in 2021 for that reason in part.
Ahmad, I had one question for you. I mean, I've been kind of really surprised at how like you've been able to continually innovate in this space. Like I would have thought like the space is kind of done and from some perspective. Like there's been enough products in the space, but just like every few months you come out with a new product, something else like that's like kind of changing the game. Like how do you have a lot more of these coming and like or do you see the space as like ripe for a lot of interesting reinvention?
I don't remember if this was in the Series A pitch. Probably was. But it was definitely in the seed pitch. But the fun thing about Mercury and what like got me interested in doing this idea is because I always thought if you get enough penetration in banking and you have enough people using you, there's so many things to build on top of it, which isn't true for that many companies. But banking is this like very fundamental thing where it has your money and like all your finances are there. So it's just like feels like there's a ton to build on top of it. So that was kind of what was exciting to me in the first place. Like banking is cool and I wanted to improve it, but that wasn't the thing that was like, oh my God, I just want to build like the best kind of banking tool. I was like, oh, once I build that, there's these other 10 things I can build on top of it. So that was always the idea. And I think that's why like in, I guess, last year or the year before, we finally got to a stage where there's enough people using us and we've been profitable enough that I was like, okay, now we can do these other 5 ideas I had 7 years later. That's one reason. And I think the second reason is I just like really like new things. Like to some extent I have to kind of hold myself back because it's just so fun to like work on new products and like enhance things. But what's also kind of funny, and I don't know if every company is like this, but we go through like phases of like, we spend 1 year like building and launching a bunch of things, and the next year we're like, okay, we did too much, and like all these teams are understaffed, and there's so much bad stuff out there. Let's just spend this year like fixing things, and then a year after that we're like, oh man, we haven't launched anything in a while. Let's go launch them. So this year was like kind of a year of launch for us, because actually last year we didn't really launch that many things because we were kind of consolidating a bunch of things that we'd launched the year before. So yeah, I don't think next year is going to be quite as crazy. And I don't know if it's actually that healthy to do it the way I just described, but that's like kind of the phases we go through.
I think that's really legit. And like, even as every time you're developing new products, you need like a stability sprint, after that, like to stabilize everything, knock out all the bugs. It makes no sense to keep putting out new things without stabilizing the last ones. So I think this is best in class kind of what you're describing.
One thing that I've learned for doing new things, which, again, it doesn't make sense when you're a tiny company, is it's very hard to do new things when you attach them to existing teams. So something we tried doing is like, hey, your main thing is like, let's take our bill pay product. For a long time, we were like, the team that deals with like payments and send money, we were like, hey, go build a bill pay product. And that was like their 20-30% focus, but they also had to like make all the payments run and all that stuff. And a year went by and they made a little bit of progress, but it didn't really work. And I was getting frustrated. The team was kind of getting frustrated. And then eventually I was like, hey, you just need to have a separate team that's just going to do this thing. Even if it's a very small team of 2 people, like 2 people that are dedicated to a new thing work way better than like 6 people that are doing 2 things. And that's been a good mode for like getting new stuff done, just having like dedicated teams that are not trying to maintain existing work. But I mean, maybe it's an obvious lesson, but I feel like I have to keep relearning that one.
Yeah, I found the same thing. Like you got to separate the innovation, otherwise you run into the innovator's dilemma as well, right? Yeah. In fact, the further away the team is, from the other teams, is the better.
Yeah, I'm always hyper worried about the innovator's dilemma. I'm probably like over paranoid about it, given like we're so small. But I'm just like, oh my god, I don't want to build a company that like like does well and then like just stagnates. That would be like the worst outcome. For some reason, I think it's like feels almost worse than failing, is to build a big company that like stops being innovative.
Yeah, you just feel embarrassed by your own company, right? You're like, oh my god, like,
yeah, oh my god, that would be awful, right?
Sheel, I'm kind of interested in, your views on India as a, entrepreneurial ecosystem.
You just went to India, right?
Yeah, I was just there a couple of days ago.
Yeah, I saw your feed. You were posting from Gujarat, I think, and but I also saw your post on Ratan Tata. Just would love to hear your thoughts on him and also just generally entrepreneurial ecosystem in India.
Yeah, sure. So we can start with Ratan Tata. So for those who don't know, the Tatas are a huge conglomerate in India. They operate in a bunch of different industries. They own Tata Consultancy Services, which is the second biggest company in India, along with Air India. They own Tetley Tea. They own Jaguar Land Rover, a type of conglomerate that you don't really see much in the world anymore. It's a huge, huge conglomerate. And Ratan Tata ran it from 1991 to 2012. This company is especially close to people in India's hearts because they basically always do the right thing. So Jamshedji Tata, who started the company in the 1800s, he actually was the first one to say like better working conditions are better for everyone. And so like he had a steel company, a hydroelectric power company. And I read this book that really was really instrumental in my life. It was about 20 years ago, this book called For the Love of India. It's about Jamshedji Tata and how he built a lot of things that were really like great businesses, but they were done for the love of India. One example is the Taj Hotel in Bombay, one of the best hotels in the world, still, especially back then. And at that time, Indians were not allowed in good hotels. So like the British had built all the great hotels, Indians weren't allowed. So he said, fuck it, I'm going to build the best hotel in the world and it's going to be for Indians. So anyway, like a long legacy of doing right by the people. And actually 2/3 of the company is owned by their nonprofit, which is kind of an interesting structure. So anyway, I think a lot of Indians have looked up to that company for a long time. Now, entrepreneurship in India I think the macro in India has been great for the past 20 plus years. And the same story has been told time and time again, which is like you have this large and growing middle class, of course, they're digitally native, and that means there's a huge opportunity. And I think that's true, but you still have to put it in perspective, which is GDP per capita is quite low. And really, the opportunity is not for 1.4 billion people. The opportunity is really maybe more like 100 million people. And if you look at most of the successful companies, that's who these folks are reaching, the like urban rich or nouveau rich or middle class. And if you look at the success stories, recent success stories, there's like cred is actually higher than that. Like they reach like the probably rich people, you could call it. There are companies like Grow investing in the stock market. Again, these are for rich people. And so I think that story of reaching everyone is a difficult one in India. I think there are still opportunities, but it hasn't been there yet. And then I think from my perspective in fintech, if you look at the ways that you make money, you can make money by charging customers. In India, there's no willingness to pay. Consumers do not pay for anything. You can make money by payments. And in India, the government has done a tremendous job with Aadhaar, which is the digital identity, and UPI, which is how you pay people. But that's meant that like they've eroded margins for any new entrant and startup. And if you want to make money on payments, it's very difficult. So then there are a couple other ways you can make money. AUM, but again, we spoke about how there just isn't that much AUM in this country investing in the stock market. And then, so the last way to make money is lending. And that's basically how every fintech company in India makes money. And for a variety of reasons, lending is a difficult model for venture capitalists because we're investing in growth and you can grow very easily by giving out money, but you may not always get it back. So that's been my struggle with India, but still love the place and have made investments there.
I guess one thing to link it to is kind of Indians being very successful in tech and in Silicon Valley. I remember, I feel like this was like 10 years ago, maybe 15 years ago. There was this article. I was trying to just find it right now, but I couldn't find it. Maybe it was New York Times, where it was like, what happened to all the tiger kids, right? There was this like idea maybe 25 years ago that like actually the most successful people in colleges were Asians, both Indian and East Asian, and like they didn't turn out to kind of they seemed to hit like a ceiling and then didn't turn out to be successful. Then I thought it was kind of funny that like that turned out to be completely wrong, and it just called it like 10 years too early. What do we think about this trend of like, I think for a while, like, there was like top 20 tech companies had like 50% of kind of Indian CEOs. Does that continue? How does that play out?
I think on the tech side, some of the smartest things that India did was build these Indian Institutes of Technology. Indian Institute of Science actually was built by Jamshedji Tata. And they started down this path of let's educate our brightest to be like among the brightest in the world. And at the time, my dad went to IIT Bombay, and at the time that he graduated in the 70s, I think like well over half of the people were leaving the country. And I think that actually went up over time, and then now it's gone down. I think it's in part that many of the brightest came to America. India was a socialist country until the 90s, and opportunities were limited. And so to succeed, you kind of were forced to come to America. Like my dad's story was he was making $20 a month in India and after graduating from IIT, and basically decided that he could make more on his stipend when he came to the United States and send back more money to his family than he could working in India, as graduating from the top university in India. So I think people just came to America, and it was the best people who came.
It's still remarkable to me, even as like, part of the Indian heritage, even though I was born in Canada, like it's still remarkable to me, like just the scale of talent in India, like the sheer scale. I don't think people in the US kind of understand this. And it's remarkable to me even to this day, because, when you're like hiring engineers, like the quality of like engineers coming out of India, It's just massive. It's just like the quality is huge and the quantity is huge, and they're hungry, right? Like, and they're willing to, to go the extra mile. And of course, we all know that, like, the universe of tech CEOs, partly comes from the universe of engineers and other talented folks, right? So, like, if you have just a large volume, you're going to have some of those that rise to the top, and they're just driven to do that. This is not stopping. This is like a trend that's going to continue. I think you're going to see even more, people from the Desi diaspora and kind of embed themselves in Silicon Valley and rise to the top. When I think of the East Asian community, though, like, China, I think there's also a trend there. The thing that's always held them back is just English, right? And that's always, been the challenge for them. But you're still seeing people like Eric Yuan from Zoom and a lot of others who are, hungry and wanting to rise to the top. I do see a generation of Chinese entrepreneurs. We do this through our immigration work. We get a chance to meet a lot of these folks. And they're moving to the U.S. now in bigger droves than ever. Just given the challenges they're having in China, and a lot of them are going to be very successful. I think investing in these Chinese entrepreneurs coming from China who are very hungry, who have like this mindset of like going the extra mile, I think is a smart move for a lot of people. So I think you're going to see even more Asians kind of, penetrate to the top of the rankings. Imad, do you have an office in India, or do you hire many people in India?
Yeah, it's really hard to do the time zone thing. We only do US and Canada. We have a few in Europe, but generally, I think if you build a company that's like completely async and okay with time zones, or sometimes people have kind of teams where this team is in India or wherever, that just functions like completely independently, that can work. And actually, one of the interesting things in Silicon Valley is, I don't think people quite understand it, is there's some companies that literally live on this arbitrage. So maybe this is too extreme a statement, but from my understanding, the only way Rippling is able to produce as many products as it produces is it's got a huge team in India, and one of its co-founders was Indian, and they really, like, because I mean, if you look at their product suite, it's like 20 startups in one, and the way they're doing it is like they get lots of capital in the US, figured out kind of sales and marketing here, and then huge team in India, like just making a very complicated product. So there's the arbitrage that exists. If you can like figure out how to make it work, you can have like a way cheaper cost of labor and build things elsewhere.
Makes a ton of sense, right? Like you sell to the U.S. consumer or the U.S. like business, which pays you top dollar, right, in the world, and your cost structure is all dispersed.
Is there other good examples of this apart from Rippling?
I've seen a lot. I've seen this is like the standard playbook now. Like for a lot
it's
of
one of the standards, yeah.
Yeah, I would say for companies like are developing not that complicated software, in spaces that are not that highly regulated. I've seen this to be basically, the standard. I mean, I'm trying to think of counterexamples, from companies I've like looked at recently. I feel like there's like a cohort of companies that, maybe started in like the early 2010s, which were used to building all in the U.S. And Presto is the same like kind of thing where we had a mostly U.S. team, and then when immigration became harder to deal with, in the Trump admin, we started moving the jobs overseas, but there was a time in the early 2010s it made sense to hire everyone in the US, but that became much harder later. But I think all the recent companies that I've looked at who've started in the last 5 years generally have an offshore team.
Really? That sounds extreme. I don't know if every company, but
yeah, I wouldn't say every team on my end. One challenge is it's gotten expensive in India. It's not as cheap as it was. Obviously, as more people have used India, the managerial talent is actually similarly priced to here. It's actually the low-level talent that's quite cheap. And so that arbitrage is going away in part because they're making more money now. And like generally, you need more Indian engineers than you would US engineers for the same amount of output.
Yeah, so I think that's changing with AI. And I also think like the labor market has dramatically changed, with the tech sort of labor bust that we've seen. And I think people are willing to take lower salaries to get stuff done now, in India especially. So that's kind of changed recently.
How is AI changing like Indian labor?
Well, we've talked about this on our pod, right? About AI makes gives superpowers to engineers, right? So AI is almost a leveling force amongst say you're a junior engineer, you can act more like a senior engineer. In some ways, you can act even more productively than a senior engineer who is not AI native. I've seen this for sure. Like the experience actually can be a detriment in engineering. So you have this just large volumes of junior engineers in India, as we mentioned, at lower cost. But if they're using AI, they actually act like a mid to senior. And actually, in some ways, they can be more
I'm a bit
productive.
skeptical of that. I feel like Raj is really, really drank that Kool-Aid.
It's true. I'm telling you, it's true.
And then Sheel,
Yeah.
when you say like
I've seen it.
managers and I guess more senior people are the same price, like we're literally talking about like Google, Facebook salaries level.
Yeah, I was talking to my cousin in India, and he's like a VP level at a company, and he's making like $400,000.
I mean, that's a lot cheaper than the US.
Well, it's not
Like a
it's
VP
not
level at
At a
like
public company?
not at a Google. He's at no. He's at like a startup that's raised a Series B.
I still think the management talent in the US is still the best. For the dollar you pay, I think it's still, and especially if you're selling into the US, you kind of need to understand the US culture. But it is surprising that the management is a similar cost, unless you're selling into India, which would make sense to hire in India.
I wanted to talk about one other subject. I'd be interested in Sheel's take on this. One thing in 2016, after I sold my previous company, I was thinking about kind of Mercury and other ideas, and I decided to like really invest in kind of trying to build an audience on Twitter. And yeah, it took a long time, but to some extent that was successful. I have 50,000 followers, and I do think part of Mercury's success is that audience of like, especially at the start when we were first distributing, it gave us a lot of trust. It gave us kind of, I guess, free advertising and organic kind of growth. Sheel, you have cultivated a big audience, and I think you kind of tweet or post 4-5 times a day sometimes. Like, how do you think about that? Is that something you just do for fun, or is that kind of a deliberate kind of strategy you've taken?
It's not a deliberate strategy, or it didn't start out that way, I should say. It started out really in the pandemic. I was on Clubhouse. So I was actually first started using Clubhouse, and then Twitter was the way to communicate with people from Clubhouse via text. And then I gained a following through the Clubhouse stuff.
You were one of the default follows, right? I think you had like 1 million Clubhouse followers or something.
Exactly. Yeah, I had like over 3 million. But obviously, I don't know how many of those people actually knew who I was. Probably in a very, very small fraction. I found that I really enjoy Twitter, and it does pay pretty good dividends for the fund. In that, if we have a section of how did you hear about us when folks applied to the Mint, our pre-seed program, and a good number of them came through my Twitter. Now that has pros and cons, because I think my Twitter persona attracts a particular demographic, which is Indian males. If you ask an Indian male anywhere, they will have seen something from me. And so actually we recently posted a job. We're hiring an associate. And I think in the first day we got 150 applications. And I think 80 of them were Indian males.
Well, luckily the Indians are really smart. So.
Wrong with that. Yeah.
That's funny.
It has paid dividends in some ways. There was one company I was really interested in investing in. I reached out to them, and I knew that a bunch of other funds were reaching out too, and they weren't taking investor intros, but the guy just responded and said, I had posted something that was funny on Twitter, and he was like, "Hey man, I'm not taking investor intros, but you really made me laugh today." And then we ended up investing in the company.
Wow, that's ROI right there. Raj, do you think about building a audience, or that's not something that interests you?
Yeah, I go back and forth. It's not something I'm super passionate about. I just I don't like talking about myself very often. And I do like talking about ideas, but I think especially nowadays the Twitter algorithm is so changeable and stuff. It's hard to depend on it. I actually like group chats, right? So this is a thing I like, is talking with small groups of people who you know and having some interesting conversations with them. I think Twitter is a little bit performative. So like obviously, you're putting on something, you're showing a version of yourself. And there's a huge market for what you do, Imal, which is like founder advice, life advice, and things like that. But I feel like people like you are doing it well. So why do I have to do it? Like you're giving all the advice I would probably give anyways. So
I would have a hard time if I had to talk about myself, but like I feel like a little bit of my Twitter and now LinkedIn stuff is like trying to give back to the community, which I can feel good about like wasting time. but yeah, hopefully I help one person every now and then, and it's like there's some.
Your content's good. Yeah, your content's good. I mean, LinkedIn is actually. I think people don't talk about this, but LinkedIn is becoming the new dominant. I would say internet feed, and a lot of tech people, I think, sleep on LinkedIn,
especially in a work context, because I feel like X under Elon, he's just pushed so far away from like these kind of work niches. And like it's actually like I follow only tech people on X, but the amount of non-tech content I get is like 90%. It's crazy. Like I have a hard time seeing Sheel's posts, even though like that's kind of the stuff I care about.
I've muted so many terms. Now I've muted like 50 terms. Like so anything political, it still comes through, by the way, but it's greatly reduced.
It helps a lot. Yeah, you have to. Otherwise, it's almost unusable. Yes, earlier this year, I basically was like, hey, I need to build a LinkedIn audience because I wasn't sure X was going to be around. So I've grown my LinkedIn audience from about 14,000 to 22,000 by just posting frequently. It's a vibe. But I have a hard time logging into LinkedIn to just like engage. Like in Twitter, I engage a lot with like replies and stuff like that. But there's something about LinkedIn. It's just like, I don't know. It's just not as smooth on the kind of engagement.
Yeah, their design isn't as optimized for like quick replies for sure. But in general, they've done a really good job with their feed. And now they have like short videos, so they're trying to like do like a TikTok for like
do we need that
for work? TikTok for work, yeah.
Every freaking site has short feeds now. Like X is trying to make that happen. Snap. I mean, even Pinterest. I let my daughter use Pinterest. I was like, okay, that's a safe social network, right? Like it's all freaking TikTok. You go on Pinterest and it's like and I was like, okay, I need to ban this. And I banned it like almost straight away. I was so surprised how much short feeds dominate Pinterest.
Yeah.
Short videos.
It's interesting, right? Because when Elon took over Twitter, there was a lot of sort of other competitors, propping up. Gabor, we know, started one competitor, and there was one from, I think one of the, Meta has Threads. There's so many, right? But I think actually LinkedIn is turning out to be the winner. To my view, right?
Oh, that's interesting. Do either of you use Threads? I mean, I feel like I haven't gone to it since.
The feed is weird. Launch. I think
I don't use it, but a lot of people do. It's actually, I'm just pulling up the data, but I think last time I checked, it had half as much traffic as Twitter, and it's only a little bit over a year in. So Threads is really working.
How many of that is Meta employees?
No, actually, it's funny. My wife works at Meta, and I used to joke to her that every time I logged in, it was only her friends that I saw, like her work friends. And now that's not true. There are a lot of other folks. I think Elon has alienated some folks from Twitter. And I'm seeing, like, when I go into my threads, I see a lot of folks that I used to follow on Twitter who are now on Threads. Now, the problem I have is when I post on Threads, I just get no engagement. So I don't get that feedback that wants me to keep posting on Threads. So I don't really post it on Threads anymore.
We're like the old aristocracy where we're living on X on like the previous followers we got, and like the new elites will arise on Threads, and we will be left behind. But yeah, it's funny. The same thing. Like it's just not interesting posting something when you have like zero engagement on a platform. But yeah, it's interesting how these things change over time. Social is like a very hard space. I have a hard time kind of investing in it. But maybe this is a good point to kind of end the podcast. Really, really fun conversation, Sheel. Thanks for joining us.
Thanks, guys. It was really fun.
Yeah. Follow us on all the channels and leave us some reviews on Apple and Spotify and all that. And we'll be back next week.